services might be a good fit for you. So what will be covered today? We're going to go quickly through the derivation of what is the R&D tax credit since its inception in the 2015 PATH Act under the Obama administration. We'll talk about what the spirit of the law is and what it aims to incentivize in terms of innovation for U.S. businesses. How can this tax credit be applied right now to free up additional cash flow and help companies get through a very challenging time with this pandemic? What you're seeing across the board is under the CARES Act and the PPP program, many companies are taking advantage of that. And now also a lesser known innovation incentive from 2015 being the R&D tax credit. We're finding this is very nascent right now for US businesses in either offsetting their income taxes or their payroll taxes. And we'll get into that in detail. Which companies can claim? A lot of people believe that the R&D tax credit is most applicable to companies. You know, you could imagine white lab coats in the back offices. A lot of people really think of STEM fields and pharma and hard biotech sciences. But there's a myriad of industries that actually align to this tax credit. So many companies that believe that they would never be applicable and align well to the tax credit are actually receiving benefits today from it. And so we'll talk about the different industries and why they can claim under the R&D tax credit. And so let's talk a little bit about the derivation of the R&D tax credit. So back in 2015, under the PATH Act, the spirit of this law was really set forth to keep innovation and technology and, quite candidly, jobs within the US borders. There was similar innovation incentives going on globally with some of the more advanced countries around the globe, Germany, France, Great Britain, and they really took some of the tenets of those innovation incentives in other countries and then made it a permanent federal law here in 2015. So Leyton was in operation globally. Our headquarters was in France, but once this became federal law in 2015, we set up US operations here with our first office was in Boston, Massachusetts, serving mostly east of the Mississippi. And then we set up operation in the Bay Area where I sit here today, and we're helping companies west of the Mississippi. And so this really incentivizes companies to have engineering function here, have research and development function here within the United States. And so once that we could establish that, and we could establish that you are innovating and doing research and development, and that you could prove that your payroll staff and your W-2 staff is designed to do that here within the US, you can apply and capture some of these R&D tax credits. And so really it falls within these two buckets, right? And you can think of it this way. If your company is paying income taxes or payroll taxes, then your company can benefit. So for the federal and state R&D tax credit, what's really nice about the law is it allows your business to retroactively look back up to 3 years. So not only 2019, you could capture 2018, 2017, and 2016. Although I should highlight right now that capturing the 2016 has just expired with the S-Corp being on September 15th deadline, and now the C-Corp being on October 15th. That is for extended filers. But we can still capture 19, 18, and 17. And if you've already filed your corporate taxes this year, then you could just simply do an amendment. And so still, I would encourage any company to speak to us to do an incentive. But you could also carry forward the tax credit up to 20 years. So there's a lot of flexibility around this law, and it really does provide a much needed boost maybe during these challenging times to keep the lights on or free up some cash flow and offset payroll tax. I could say that honestly, a lot of the engagements we have been doing over the last 6 months have been offsetting payroll tax. And that I think is a more immediate injection. It's a more immediate free up of cash. And it's something that's realized a little bit quicker. And for companies maybe that aren't having a significant amount of income to offset, the payroll tax credit seems to be a nice fit in that way. So who qualifies as a startup for payroll credits? So some of the tenets of this law state that your business has to have $5 million or less in gross receipts. It has to be founded within the last 5 years. So were you incorporated in the last 5 years and established your first gross receipts within the last 5 years? Anything beyond 5 years would exclude that company from being applicable, and a 250,000 year maximum per year. Happy to discuss payroll tax credits in more detail at the close of this call, or we could set up the assessment with our in-house tax attorneys and CPAs that are mission aligned to your business. They understand the nomenclature of your business, where your investments have been made, and you will have that type of one-to-one consultation with someone that comes from your industry. It's one of the advantages of working with Leyton. So what companies can claim this tax credit? So as I mentioned earlier, the first companies really to take advantage of this in 2015 and 16 were some of the hard STEM science fields. So biotech, pharmaceuticals, medical devices, chemical, physics, and then the engineering functions as well, civil engineering. Those are really seamless, and there's really a nice congruence there for those type of industries. But now we're seeing an emerging technology, especially here on the West Coast, with the advent of fintech and blockchain technology, artificial intelligence, machine learning, virtual reality, all these new type of software and emerging technology fields are definitely applicable as well. Same with manufacturing, with 3D printing, construction. You think of architecture fields and design, leads buildings, sustainability efforts, clean technology and clean tech. All of these pursuits aligned to the R&D tax credit, driverless technology, any of those pursuits. And we would encourage you, if you're doubtful or if you're inquisitive enough to want to find out if your field and company applies, then simply do an assessment with us and we'll align it to the 4-part test of the R&D tax credit, and we'll see if those are being satisfied for your business. And so what is that 4-part test? So the law is written in this, and it's kind of generic in a very simplistic way. The way I like to remember it is, this takes me back to high school science days and learning about the scientific method and methodology. So it's really this 4-part test. Are you improving a product in a way that is doing research and development and displaying in an innovative fashion of improving that product to the industry and marketplace? Or are you improving a process in your field that is advancing your field through research and development and innovation? Is there an elimination of uncertainty? So are there many times in engineering or architecture, there are different renderings and submissions and approach to a problem, and then through elimination of uncertainty, do you rule out or exclude some of those approaches and go with one of them based on some of the trial and error that might be behind it? So all of this trial and error, elimination of uncertainty, improving products or processes, this is really basically holding up your business to the scientific method and trying to determine if there is innovation, research, and development here. And if so, your business can be rewarded and tax credits will be given by the government that you could carry over or offset your income tax or your payroll tax. That's a really simplistic way of looking at it, but I will address more questions at the end if you would like some clarification there. But in essence, it's just looking for technological in nature and an application of the scientific methodology. So what can be claimed? This is always a popular question. The most obvious expenditure that we would look at is W-2 salaries. W-2 employees here within the United States. Are there engineers on your W-2 staff that are dedicated simply to engineering and research and development? Or perhaps there's salaried employees at your company that touch those pursuits in that way that I mentioned earlier. Are there employees that are improving products and processes, that are doing trial and error? Oddly enough, one thing I was unaware of before I came into this business was I didn't think that breweries and some of the scientific methodology that goes into the craftsmanship of brewing. There's trial and error, there's elimination of uncertainty, they're changing the product constantly. That applies in that sense. So you can look at different aspects of your business, but salaries is definitely one of the more direct QREs or qualified research expenditures that we will look at in our review of your business. Then there's raw materials and supplies. What are you using to conduct some of that research? In the dentist lab field, there's obviously different approaches to composites and some of the new technology that is being used in the dentistry field. That would be an example of raw materials in dental labs. Computers, cloud computing costs now, and the use of technology in conducting your research. Legal fees, did your business pursue patents? And if so, was there legal fees and attorney fees involved in pursuing and solidifying those patents? These will all be part of the qualifying costs or qualified research expenditures that we will look at with your business. And so here's a little bit about what Leyton's process is. At first, we will have an introduction call with a business development executive like myself, and we will have about a 15-20-minute high-level conversation about your business, determining when were you incorporated, what type of company are you, an S Corp or a C Corp, when were your first gross receipts. We'll go into understanding what is unique either in your product or process or approach to your field, really trying to understand how your business might align to that 4-part test or that 4-part methodology. And then we'll also go through, in some sense, trying to determine where your qualified research expenditures might be. If we agree in that phone call that there's something there, then our business development executive team will send out a letter of engagement or an LOE. This is a standard non-legalese, just a letter of engagement. And what it allows us to do is schedule a deeper assessment call for about 45 minutes to an hour. And in that assessment call, we will bring forth some of our in-house tax attorneys, tax specialists, tax CPAs, someone mission aligned to your business. So if it's an engineering firm, we have folks that are quite familiar with us processing the claims for an engineering firm. And we find that that is really beneficial for customers and clients on the other end of the table. And all of the people in our initial assessment or engagements and assessment calls are in-house Leyton employees. So we bring those professional experts in-house. It is one of the unique differentiators for our business. And we also conduct the report writing. So also as part of our services of drafting up all of these documents and doing you a full service commitment for this engagement, we write up the technical analysis in defense of your R&D tax credit. So it is about a 25 to 30 page technical analysis that is written by our in-house engineers, doctors, CPAs, mission-aligned professionals to your field, that if there's any visibility to the claim in the future, you have that stamp of Leyton support of why we thought the R&D tax credit was applicable and why we drafted the documents for you to file. So that is a big part of what we do here. And I will answer any questions about what our full service assessment is, what our full service engagement is, and what our report writing and defense of the credit is for you at the close of the call, if there's any questions about that. And then once the credit is claimed, this is a practice that companies do year after year. You can have Leyton do this year after year for you if you're happy with the results the first time. We have about a 95% recidivism rate, where companies just, once they see how seamless this is and the job that Leyton does and our reputation in the industry, many choose to have us do this year after year. So we could certainly talk about that in the assessment, but it's something that you could just see how we do for you the first time with the 3-year look back, or the first time we do a payroll tax credit for you on the current year. And then you can incorporate this into your plans year after year and use our consultancy and expertise to make sure that your business is aligned to the R&D tax credit, especially in terms of making sure that you're identifying qualified research expenditures and making sure that those are identified properly so you can take advantage of them. Finally, just a slide about us. 20 years in the global consulting arena, specializing in innovation incentives for businesses. Here in the US, obviously called the R&D tax credits and the payroll tax credits. You could take advantage of this at a federal level and also at a state level. States like California have a very generous view and position on R&D tax credits. So we would look at both of those for your business. We would look at, do you align to the federal incentive and do you align to the state incentive? And we could also discuss, if your business is less than 5 years old, we could look at the payroll tax credit as well. These are all available innovation incentives that are available to your business today. Leyton has worked with 20,000 clients globally, and we've captured over $500 million in R&D tax credits for our customers and clients around the globe. So we have a saying here that our #1 client is the US government. And so we make sure that our work is thorough and our work is responsible. And I could say, for being with Leyton over the last year, that that is definitely the case. Finally, just some information. If you have any questions or would like to follow up, there is the contact us at leyton.com email. This is my phone number here, the 347 number. There's a website address, 2 offices to serve 2 halves of the country, and then some of our global outreach that you could see at the bottom. So my commitment to Caleb was to take about 20 minutes. It looks like I've gone 2 minutes over. Not bad for 10 slides, but I think the most important part here will be to field some questions from the field. So I'm happy to do so at this time. And thanks again, Caleb and Startup Junkie, for this forum and format this morning. I really hope it's helpful to the Startup Junkie community memberships. And again, the best outcome of today would be if we could help any of those membership community companies take advantage of this, that would be a win-win for everyone. So I'll turn it back to Caleb, our mediator in charge.
John, that was a great presentation. I will not be mad at you for 2 minutes. I promise. You did great. So we already have a question. I have a question here from Erhan, who asks, or who says, we spend around $5,000 spent $5,000 for patent applications in 2019. Is it possible to apply for R&D tax credit, and how much could we get?
Yeah, so our fee, and I can get to this now at the close. So we don't charge anything upfront. We have no upfront fee. Only if we capture an R&D tax credit for a company will we apply a 25% fee of the net sum. That is for all of our services all in. So that's for the drafting and writing the defense of the report. I would think for that amount of money at this time for your business, to create an invoice for you in a couple of months for our fee, that might not be a viable transaction. What I might say for your business is it might be worth to wait till next year, or wait till there's a little bit more growth, either in income tax to offset or payroll tax to offset. And then you could do a 3-year look back. So the timing of when this is a viable solution for your business is pretty important. So I might suggest that if that's the one QRE that you're focusing on at this time, that you might have better metrics looking back in the future. You won't lose it, but we could certainly talk about it at more length. Maybe there's some other QREs within your business that you haven't considered. And if you would like a free consultation to kind of talk about your business or how to align your business with the R&D tax credit going forward, this is a commitment we've made to our partners at Startup Junkie, and we will do that for your business solely one-on-one going forward if you like.
Katie asked, how does this align with a company that's received federal R&D funding?
Federal, if you've received like a grant?
Yeah, so like I work with companies, I help companies with SBIR and STTR funding or proposals. How does this, like if a company is solely on federal R&D funding, such as an SBIR or STTR, how does applying for an R&D tax credit, where does that align?
Yeah, so I know, Katie, that it affects it, but I would be a little bit remiss to comment on it. I'm not an actual CPA, but I do know that it does change the dynamics of the R&D tax credit. Mm-hmm. What I might encourage you to do is speak with one of our in-house CPAs in San Francisco, or I could have them call you, and then they could outline just exactly how the metrics change. But if you're working with companies that have those grants, then it might be a valuable education for yourself to know exactly how it changes. And then you could see who in your field or purview might be applicable to the R&D tax credit. But I'm not sure exactly when it comes to the different grants, and I'm not really well versed in it, to be honest with you.
Gotcha. Yeah, that's awesome. Hey, and out of curiosity, do y'all have a team that is specific for biomedical?
Yes.
Y'all do? Okay.
Very much.
Okay, cool.
That's one of our two of our biggest industries, I would say, especially in the Western US, mm-hmm. We call life sciences, and that would encapsulate your field in that question. And also just technology. All ever emerging technology is either in software, technology startups, any of those fields like blockchain, machine learning, AI, all of those emerging technologies. We're finding that those are probably two of the most pursued R&D tax credits at this time. So definitely.
Cool, thank you.
Any more questions? And feel free to unmute yourself and ask if you'd like, or you can drop it in the chat box and I will read it out loud. Doris asks, thanks for all the info. What are key components to look for to keep it simple that would be a great referral for you? You have listed previously, but for someone just wanting to refer.
Yeah, so what's like our ideal customer or client to work with, Caleb?
I would say so.
Yeah, so I would say companies with about maybe $500,000 in revenue till about 15 million, I would say is really our wheelhouse. I would say 5 employees to about 50 employees. I think a good starting point would be if there's 3 dedicated engineers in W-2s. And look, we certainly understand the startup junkie membership community may not apply in all of these areas. We understand the infancy stages of some of these businesses, but we are willing to grow with you. We're willing to scale with you. We're willing to shape and consult some of your business in these areas so that maybe next year or even going forward, we've helped shape your business in the sense that you're aligning and being aware of the R&D tax credit and making sure that you capture all of these benefits going forward. So even if it's not applicable today, have the consultancy or assessment call with us, and I think that would still be valuable for some of the members here in going forward. So that's really the spirit of the outreach today and some of the consultation today. Some of you may apply to this at this stage and some of you may not, but we're still here as a partner for Startup Junkie.
Doris asks, what's the best way to refer them to you? How would you prefer them to be referred?
I would say starting right now, the contact us link, and then we can either disseminate that to our Boston office personnel or our San Francisco office personnel. I think even these times of COVID flattening and us all working from home, there still is some benefits of working for East Coast companies on the East Coast or West Coast companies on the West Coast, but also understanding that a lot of your businesses are regionalized and centralized in your state. So we will probably handle it out of our San Francisco office, and feel free to just follow up on the link and we'll make sure that it's disseminated appropriately.
Do you have any more questions? Give it just a second. And I will say, just for everyone that's on the call and those who didn't make it, we will take this video and put it on our YouTube and drop it on our resource page on startupjunkie.org. Had some difficulty trying to stream it to Facebook, so it's not on Facebook, but it will be on our YouTube channel. And if there are no more questions, I guess we will go ahead and give 30 minutes back to everyone today. And John, I want to thank you. We really appreciate the presentation and appreciate the partnership with Leyton, and I look forward to working with you again in the future.
Thank you so much, Caleb and Startup Junkie, and thank you for everyone attending. I hope it was helpful. Give us some outreach and a call, and we'll be happy to walk you through this in further detail with a CPA on the call.
Awesome. Everyone have a great day. We'll see you next time.
Thank you so much. Bye.
Bye.